Hey everyone, happy Sunday. Hope you guys are well. So I'll be going over a lot of the setups that took place last week, the pros, the cons, the good, the bad, and whatnot. So starting with Monday, the 5th of June. So going into Monday, I'm just going to highlight obviously the target. So obviously our initial daily buy side targets going into the Monday market was this imbalance that remained open. And our daily sell side target going into Monday was this swing low down here relative to where obviously price closed on Friday. Now, if we go down to the 4 hour time frame, so what I'm going to do is just going to forward play this twice to just before the London Open. Just going to get my markers out again just to make sure that we're aligned. Let's see. So there we go. So yeah, so we are pretty much aligned. So we can see obviously that going into the Monday market, price had delivered on obviously 3 bullish expansions the previous week. And thereafter, we'd seen price obviously given this initial push to the downside. So we can call this a first bearish expansion. Now, just before obviously the London market, we can see that the first draw on buy side liquidity was this imbalance. So you can see that with the golden marker. And the next draw on sell side liquidity was this swing low down here. You can see already highlighted. Now, if we go down to the 1 hour time frame, so again, let's just pull this up. So this is our European Open, this is our London Open, and let's put the labels on there. And then European Open. Oh, that's a bit too big. I think it's the different one. There we go. European Open, and then London Open. There we go. So just forward play this once, we can see that price going into Monday had given us 3 bearish expansions to the downside. All right, so the next draw on buy side was this initial swing point, swing high, and the next draw on sell side was the swing low. So we've seen 3 expansions to this downside on the 1 hour, and obviously on the 4 hour, we've seen prices giving us a single expansion to the downside. So we can either anticipate price to give a lower low before a potential reversal, or we can anticipate a contraction, i.e. a bullish reversal, and then a potential bearish continuation on the 1 hour time frame. So on the 15 minutes time frame, obviously we had an Asian range that was created just before the open. So the range identified was from A, B, and C. And we can see the prices have obviously been accumulating within this range for some time. And then going into the London Open, right? So I'm just going to zoom this out. We can see that price traded into the 1 hour sell side just before the open of the session. Now, it is important to note that on this day, there was also a red news event that was scheduled at 10 a.m. New York time. I do apologize for the background sound. There is, I believe, some construction going on near me. But there was a red news scheduled at 10 a.m. So it's important to be aware of this because they could hold price before the red news and shift during the red news event. But I remember on this day anyways, so the ideal scenario here would have been to wait for price to trade into the bearish order block because price had essentially given a bearish break. Now, in this situation, I know before I used to say that you could trade along from the 5 minutes to your order block, but I do not agree with that setup anymore because it is a low probability scenario. So in this scenario, the best thing to do is to actually wait for price to trade into the order block. And then from the order block, you could actually then trade a continuation depending on the context, or you could trade a reversal to the upside. So just before, obviously, our cutoff time for trading in London is 7 a.m. So 7 a.m. price hadn't really delivered on a opportunity. We can see that price obviously hadn't interacted with the order block. So at this point, you could call it a day, right? Now, there are scenarios where price could actually trade into the order block in New York and then give that continuation to the downside. But again, these scenarios can work, but a lot of the time I actually recommend not trading them if you can avoid it. But just before the red news events, what we saw was price obviously had held for a bit. And then 10 a.m. New York time is quite late to trade in the New York session, but price obviously gave that shift into the bearish order block. Now, at this point, because again, the bias, if you remember on the 1 hour time frame, was a third level 3 short. So this was obviously a lower low because remember what I said, right? So you always need to frame the BRCs, BRs within the context of the 1 hour and the 4 hours. So the 4 hour had given us 1 expansion to the downside. The 4 hours is the 4 hours has given us 1 expansion to the downside. The 1 hour had given us 3 expansions. and now we have a lower low. So therefore, it goes without saying that the next logical move from this, within the context of a lower low, is a bullish reversal. And you can see the price had taken out yesterday's low as well. So bullish reversal was imminent. So in this case, I personally wouldn't advise trading the BRC back down because it just wouldn't make sense within the context of the 1 hour. So obviously what we saw was price trading into the bearish order block. Now, again, this could be a BRR5, or this could be a BRR15, or this could be a BRC to the downside. Now, a good way of identifying obviously BRRs is that we can see the price had given a break of, so like we see the price gave an intermediate leg right there, right? So it gave a break of market structure, okay, right there. So this leg obviously was the secondary shift that obviously created that imbalance, and this is where a break of market structure was truly defined. So price obviously traded into the order block, given a break of market structure on the 5 minutes. So personally, the most optimal scenario in this case would be a BRR5. Now, BRR5, you can trade one of two ways. You can either wait for price to trade into the imbalance, right? And then you enter from the imbalance. If it is a massive imbalance, price could either tap it and keep it rallying or fill it. So within the context of this, what I would say is the best thing to do is to set an alert for price to actually trade into this imbalance. But then what you're looking for within this imbalance is a 1 minute confirmation to go long, right? So in this case, obviously price traded into the imbalance before giving a bullish sort of break of market structure right there. So you could have decided that, you know what, I want to go long from this break of market structure, right? So stop loss going 5 pips below the low. And you need to evaluate, okay, can I get a 122 to the next reasonable draw on liquidity if I were to take a trade from the order block? That's the question. Let's see. All right, so I'll just leave this at 5.1. And what kind of a break of market structure was this? So we can see the price has obviously traded above this initial high, and this is a classical break of market structure with an AOI being the last downgrade candle. So generally only interested in entering at the lower extreme of my order block of this range. So if we're gonna go long position from here, stop loss 5 pips below the low. And of course, the first target, reasonable draw liquidity, would be the high of the Asian range as a 1 to 3, which is not bad. And of course, our second target, right? And then our second target would of course be our H1 BST. So of course, which is going to be this initial imbalance that was open. So this was the initial setup that one could have taken, right, as a BRR5. And then obviously price traded into AOI, area of interest, right? Now, in this case, price obviously took out the stops. Now, I personally, again, like I said, in this kind of scenarios, because they're very, very low probability, especially after red news has taken place, if you do get stopped out after the first entry attempt, I personally would recommend to just call it a day, because there are other days where cleaner opportunities might present itself, right? But if you get stopped out and it's a purge of the lower price immediately snaps back into the range, you could obviously consider re-entering, because we do have re-entry criteria, and you should have re-entry criteria within your trading plan. So this is a purge stop out. So purge stop out is where price vector accelerates below the low and then immediately snaps back. So you can see like some sort of a trap pattern, but it's a very fast, aggressive movement. And for me, with these kind of stop outs, I always re-enter when price either trades back into the range, or when I say trades back into the range, I mean it trades back and closes back above the initial low that was taken out, or it closes and it trades back and closes above the 13 EMA. That for me would, I'll just initiate a market order with my stop loss going 5 pips below the low. So below the new low, by the way. So before this happens, I would always establish where that new low is, and you have to be really, really fast with these kind of re-entries if you want to get them. But anyway, so price obviously gave us that imbalance opportunity before imbalance retest before rallying and taking out the high of the Asian range. Okay. So that was Monday's trading session. Now, at this point, personally speaking, like I said, whether you re-enter this or not depends on your personal preference. But this was the only kind of opportunity that was tradable on the Monday market in line with that incoming bullish reversal. So let's go down to the Tuesday session. So going into Tuesday, let's see. So going into Tuesday, we now have a new buy side target. So a new buy side target is going to be the swing high that has been created right there. So it's daily BST. And then of course, daily SST is the swing low. Now, if we go down to the 4-hour time frame, we can see, of course, just to forward play this twice, we can see that price has obviously delivered on 2 bearish expansions from the Monday session before snapping back into the range. So the next row on buy side relative to where price is just before the open of the European session is this imbalance right here. Next row on sell side is this imbalance down here. We can see that prices obviously delivered on 2 expansions to the downside, and we could potentially be seeing a bullish continuation, but also there is a likelihood the price could be delivered on that 3rd expansion to the downside. Now, if we take a look on the 1-hour time frame, we can see that price. So again, just to grab these 2 lines and just move them along. Right there. Okay, perfect. Right, so we can see that just before the European Open, we can see the price is delivered on initial expansion, contracted, and then delivered on a secondary push to the upside. So we can see that before the European Open, price is within a secondary push for a bullish cycle. So within the context of the 1-hour time frame, of course, long is the most optimal scenario. And within the context of the 4-hour, it could either be looking to go long as a bullish reset, or we're looking to go short. Now, the 15 minutes, of course, we had a BC, so price trapped above the Asian range just before the European Open. Going into London Open, we can see that price obviously is still trading. So I'm just going to get rid of the order block box for now, but we can see that price is still trading within the range. And then the next candle, so this is the London Open candle, bearish close. This alone doesn't define a break. We need to ensure the next candle doesn't trap back into the range like this, right? So next candle closes firmly outside of the range, giving us a definitive break or bearish break of the Asian range. So within the context of this break, what I'll do is, again, we identify where that bearish order block is responsible for that break. So order block. So obviously the order block could be this massive, this bullishness that took place before price gave this bearish move to the downside. And then, of course, what I'll do is I'll set a price alert there, wait for price to trade into that general area. And then we go down to the 1-minute time frame, and we're simply looking for an opportunity to go short. So let's take a look at this. It's a very simple opportunity. Price traded into the bearish order block, right? And then we saw a break of market structure right here. Okay. Let's just move this up a little bit. All right. So a break of market structure right here. And then you would want to place your stop loss 5 pips above the high. Okay. Now, if you go short, of course, a short opportunity is to be taken as a classical break. So last up close candle is our area of interest, right? So you enter at that last up close candle, which is bullish, which is our bearish order block, right? Now, again, there's many ways you can trade this, right? So this is a break opportunity to enter, but personally, again, you have to evaluate the situation for yourself. You could either enter the midpoint of the breakout, you can enter at this imbalance right here. But I went for the last of course candle because that was the only way that I could see if a 1-2-2 would be possible to the recent low. Now, of course, the recent low for me wasn't going to be the case for me to take my profit, but I decided to bypass the recent low because of the context of this general opportunity was indicating bearishness. So I looked for the next reasonable draw on liquidity relative to where price was. That was basically just below the recent low. And that for me was, if I just zoom out of this, there we go. Right, so for me, next reasonable draw of liquidity to aim for is a retest of this area. So this is the H1, H4 BST from the previous trading session. We can see there was a short-term low that was created right there. Again, this is an area of demand activity that took place. So you can aim to take your profit there, or you could aim to take a profit at the short-term low just below it. So that for me was the next reasonable draw on liquidity. So of course, because that was below the H4 SST, you'd need to ensure your first TP target was H4 SST imbalance, and the second target would have been the retest of the previous day session. So what happened? Price obviously traded into my AOI. It's pretty nice, and then after that proceeded to give a very smooth drop. Right, firstly filling that 4-hour imbalance, and secondly trading into the AOI of interest from the previous day. So that was Tuesday's trading session. Okay, so Tuesday's trading session was a break retest of the order block continuation to the downside. It was very straightforward. All right, so again, that's what I mean. So some days, if you do get straightforward setups like that you just cannot miss. So if you do see something tricky on one day, do not be hesitant or scared to just let it go, because something else would come up. Because what you don't want to do is lose money unnecessarily when you could have just like saved your money and grown it the next day on something a lot simpler. All right, so going into the 4-hour time frame, we have obviously seen price, so just going to forward play this twice, giving 2 bearish expansions to the downside. Now, at this point, I was a little bit skeptical. I was like, it's very likely price will trade back to this low, but it's also likely that price could give a bullish continuation. Now, the reason I didn't really see much chance of a bullish continuation is because price hadn't delivered a break of market structure on the 4-hour to the upside. Now, the next draw on liquidity just before the European Open was, of course, the swing high, and the next draw on sell side liquidity was the swing low down here. Now, if we go down to the 1-hour time frame, right? So again, just to pull this forward. Right, so the next draw on buy side liquidity on the 1 hour was the swing high, and the next draw on sell side liquidity is the swing low down here. Okay, so it's pretty simple and pretty straightforward. So if we go down to the 15 minutes, we can see that price is delivered point A, point B, point C. So we have a very definitive Asian range. So what we now need to do, again, just remember this, we have quite wide BSTs, H1 BST and H1 SST targets. So we need to wait for price to first trade outside of the Asian range and interact with at least the H1 BST or SST. So just before the London Open, we can see that we have a bearish break scenario. So of course, the AOI is going to be our bearish order block right here. So price obviously then traded into the order block, but hadn't interacted with either H1 BST or H1 SST. So in my view, in this case, there is no opportunity to trade as of yet. And then price obviously kept rallying, traded into H1 BST as well as H1 SST. Now, in this case, you evaluate for yourself, it's okay, what kind of scenario is the most plausible scenario within the context of what's happening here? Well, we can see that price has delivered on a 15 minutes break of market structure. So within a 15 minutes break of market structure, of course, a BRR 15 is the most optimal scenario. Price gave a break of market structure on the 15 minutes. So obviously you have the swing high right here, but if you look a little bit closer, you can see that there's an intermediate swing high right there, all right? The BMS. So now this is a secondary break of market structure. So our AOI would be this imbalance. Now, here's the thing. Of course, you cannot just place a pending order there and then you stop 5 pips below the low, because that would be very, very, very hard to make any kind of profit from that, right? You can probably get maybe less than a 1-to-1 just to the next reasonable target, which would be, again, we're looking at the previous day, because obviously price traded above the H1 and H4. So you'd be looking at the previous unmitigated areas, which we're going to be aiming for. But the reality is that price obviously would give potentially a 1-to-1 or even less than that. So we want to wait for price to trade into our AOI, and then on a 1-minute time frame, we're looking for a break of market structure. Okay. So again, so price traded into the imbalance, and after trading into the imbalance, price gave a 1-minute break of market structure right there. What kind of a break is this? It's a classical break of market structure with a breaker. So optimal entry opportunity would be at the breaker with your stop going 5 pips below the low. Okay. So you wait for that new low to be created, and then once that new low is created, that's where you look to trade. So long position at the breaker, stop 5 pips below the low. Where is the first opportunity to take your profit going to be? Well, it will be at the next reasonable draw on liquidity. Now, considering the recent high is less than a 1-to-1 or 1-to-2, you want to aim for the low of yesterday's H4 buy side targets, right? Because price actually failed to trade into that area. So that gives you your 1 to 3. And then for your second position, Control Z, Control Z, Control Z. There we go. And then for your second position, there you go. You can then aim for price to either fill the H1 imbalance or to fill the H4 imbalance for 1 to 7. Okay. So that's the opportunity that presented itself. Again, remember, this is in line with the 1 hour bias because the 1 hour is currently bullish, right? If you remember, we've seen that on price had given us 2 expansions to the upside. So personally, I'm trading in line with the 1 hour bias within the setup. So what price did, price traded into that ever so slightly. It was like literally by the pip, but price traded right into the breaker, right? And then from the breaker, it began to rally, right? So it's your first target would have been hit just before the New York Open. And then just after the New York Open, price continued to rally, right? At this point, you can move your stop loss to break even, take partial profit. You know, how you manage this position is entirely up to you, but second profit target would have hit just before, so sort of like before the afternoon or before lunchtime, New York. So this was the setup that took place on Wednesday. It would have been a very easy setup to have missed because you would have definitely needed to have paid attention. Whereas a 15-minute break with a secondary break of structure, first retested the imbalance, and from the imbalance, there was a 1-minute opportunity to go long. Okay. Right. So let's go into Thursday. Right. So we have a swing low down here. This is our next draw on sell side, and our next draw on buy side stays the same. Now, going into the 4-hour time frame, it's like, okay, what's the next logical move? Well, we've seen again, 2 push to the downside. It looks like price is giving us a bullish expansion, but at this moment in time, you know, it's like we only have sort of 2 confirmed expansions. The reason being is because this is a trap, price contracted, and then this is also a trap above this high. So I'm going into the open of the European. So for me, the 4-hour proposed quite a bit of uncertainty. We had the next draw on sell side being the swing low, the next draw on buy side being the swing high. However, going on to the 1-hour time frame, there's a little bit more certainty on this time frame. Okay, there we go. So this is again, just need to move this along just once. There we go. So we can see very clearly that price has obviously delivered on 3 expansions to the upside on the 1-hour time frame. We're seeing price is obviously giving us this reversal, and this reversal is an interesting one because price reversed and retested the buy side target of the previous traded session, right? And then thereafter, we can see the price looks like it's beginning to rally again because this again is a reversal of this initial bullish cycle. Now we can see that price could have either delivered a 1 expansion to the downside reversal. We can anticipate a potential reversal continuation, or this could be a reset long, and price could simply be delivering on a single bullish expansion to the upside. Now, it is important to note as well that if this was a single bullish expansion to the upside, obviously this would be a break of market structure right there. Okay. What kind of a break of market structure will this be? It will be a secondary break of market structure with an imbalance right there. Okay. So in this case, bullish was the most optimal scenario for the 1-hour time frame. So if we now go on to the 15 minutes time frame, we can see that price obviously is delivered on an Asian range. We have point A. You could look at it multiple ways. You could look at it as point A, point B, point C, where price obviously is bouncing around this initial bigger range. Now, at what point does price, I'm just going to delete this to prevent any confusion. You can see that going into the London Open, price kept trapping below the Asian range, but also took out the H1 SST. And then eventually, obviously, price gave us a bullish close outside of the Asian range, but it's not yet a break. We need to wait to see whether the next candle traps back into the range or gives us a firm close. So we can see the next candle closes outside of the range. So therefore, this is now a bullish break. Now, scenario of bullish break, our AOI is going to be what? Our AOI is going to be the bullish order block responsible for the break, which would be this general area, because this bearishness is what capitalized the bullishness that took place. So what we have is now an AOI, so we simply needed to wait for price to trade into our AOI, which it did. And as soon as it traded into your AOI, you go into the 1 minute time frame, and what you're simply looking for is a 1 minute break of market structure. We can see the price obviously delivered this initial low, right? And then after giving an intermediate high, contracted, delivered a higher high, right? And this higher high is obviously what? A break of market structure. Now, what I usually like to do is I like to see price not just like purge this high. I want to see a firm and definitive close above this high, right? There we go. Once I've seen this definitive close above this high, I'm like, okay, this looks to me now like a very confirmed break of market structure. So stop goes 5 pips below the low, right? 5 pips below the low. Of course, my AOI is this imbalance right here. Okay. Right, and then what we're looking to do is we're going to go long from the imbalance, secondary break of market structure with stop loss 5 pips below the low. Whereas the first target you ask, it's a good question. First target is going to be the recent high. We can get a 1, 2, 2 through there, so that's perfect. And then of course our second target. Now, if we go to the 1 hour time frame, what we're looking for is the next reasonable drawn liquidity. So you can see that. So again, sorry, just going back to the 15 because all the information we need is on the 15. Right, so we can see the next reasonable drawn liquidity would be yesterday's high, which would be where the H1 as well as the H4 target is. So that's where I'll put my secondary target, just at yesterday's high. Okay. So that's the setup that we should have looked at on Thursday. So we can see the price obviously traded into, eventually anyways, traded into our AOI. There we go. You know, obviously took up this. The 5 pip stop is so important because again, it just keeps you in the trade. No, not in every situation, because sometimes price can obviously purge more than 5 pips as we saw earlier in the week. But in the vast majority of situations, it should keep you in the trade if price was to purge the recent low. And then eventually, you know, we saw in New York session, a very nice sustained rally, which would have seen both your first profit target and your second profit target hit for 1 to 6. So it's a very nice risk reward on that opportunity. So this was the setup or scenario that took place on Thursday. So going into Friday, we can see that price is now obviously taking out our daily buy side target. So what we need to do now is just obviously to adjust our daily range, which is just this imbalance. Daily SST remains the same. If we go down to the 4 hour time frame, so just forward play this twice, we can see that price obviously has delivered 2 bullish expansions on the 4 hours. So on the 4 hour time frame, bullishness is the better direction. So this time frame that has a lot more clarity. We have an imbalance that remains below. Of course, we have the swing high, which is the buy side target on top. If we go to the 1 hour time frame, we can see the price has clearly delivered 3 bullish expansions to the upside, with the next round sell side being this imbalance, the next round buy side being this swing high. So 4 hours giving us pointing towards further bullishness, and obviously 1 hour price has delivered an initial high. So it's likely price could deliver a higher high, which should complete the 4 hour bullish cycle. So if we go down to the 15 minutes time frame, now obviously what we're seeing is price as obviously giving us a range A, B, C. So I'm just going to get rid of this for now. Now price took out. Now price obviously traded above and closed above the high of that Asian range. Right, 1 second, let's just adjust it slightly. Right, so price obviously traded and closed above the Asian range, and also took out the H1 BST, as well as the H4 BST, as well as the daily target. So what is the kind of scenario we can anticipate here? We can either anticipate a BRR, so which is a break retest reversal 5 minutes, or we can anticipate a BRR 15, where price could give a break of structure on the 15 minutes time frame, and we anticipate a continuation reversal, or a BRC. So BRC is where obviously we have an AOI being this bullish order block. Price could take out the low of the order block, even sometimes the low of the Asian range, and then give a continuation to the upside. Or a BR1, which is where price could obviously retest the order block, take out the recent high, and then give us a bearish reversal to the downside. Now we can see that London Open price has traded into our traded below the order block, as well as below the Asian range, and also giving us a 15 minutes break of market structure on the 15 minutes time frame. Now, if we go to the 5 minutes time frame, we can also see as well, and we have a 5 minutes break of market structure. But for me, what was one thing that stood out is the fact that price left an unmitigated zone. So I was a little bit ambiguous on this day because I was like, well, price is falling, falling, falling. It's an unmitigated zone. And the same thing with the 15-minute time frame. Price left an unmitigated zone, which is obviously going to be our last up close candle. Without retesting it, it just kept on falling, falling, falling. And for me, this is a very strong indication that price could be looking to come back up to this area. So the optimal scenario would obviously be a BRC. Now, it's a real weird BRC, right? But again, it's just like taking things into context, right? Because within a BRC, one of the giveaways of BRCs is that price would trade into the order block and fail to mitigate against like a 1 minute break of market structure or a 5 minute break of market structure, right? And obviously, price has delivered also on the 15 minutes without giving us this retest, without trading back into this general area. So now, personally, because of how unclean this general structure was, I decided to not trade this particular setup on Friday. However, right, this is just something to bear in mind. Well, say you wanted to definitely trade this setup because it would be a tricky setup, to something to look out for. The fact that price left an unmitigated area means that you should have been looking out for a 1 minute break of market structure, right? So you should have been looking to go back long. So in this case, price obviously delivered on an initial high, retracted, and then delivered on a secondary high. Now, another thing to have been aware of as well is that price had obviously delivered on two bearish expansions to the downside. So you should definitely have entertained the possibility of perhaps price delivering maybe one more bearish expansion. And then on that third bearish expansion, you could have looked to go long. This was another thing that I was considering as well. It's like, okay, if price delivers one more third bearish expansion, I would go long because that way I can see that there is a complete bearish cycle, but this area is unmitigated. So, but then that didn't happen. Essentially, what price did is obviously, if you look on the 1 minute time frame, price had delivered on a like I said, yeah, break of market structure, retested the area of interest, could have gone stop 5 pips below the low. I didn't take this trade because for me it wasn't a clean opportunity to have engaged in, right? But then obviously what we saw was a variation of a BRC, right? So let's imagine you did take this opportunity, right? You'd have entered at the imbalance with your stop going 5 pips below the low. Okay, so this is a long opportunity. And then your first target should have been obviously wherever the recent high was, which is right here. Now that's even less than a 1 to 2. So you could have adjusted your entry. And again, this is just I didn't trade this there. So this is just trying to force a trade, right? Which is not a good thing to do generally. And you could have gone a 1 to 2. And if you remember on this day, I mentioned if you were to go long, your secondary target should be a previous unmitigated zone. And if you remember, I said you could always find that to the left-hand side. So I zoomed out, I went to the left, and I was like, okay, there is an imbalance right here. Obviously, there's this imbalance that price filled before bouncing back, but there was a higher imbalance, which I pointed out. I was like, okay, there's the close of this imbalance there, right? And obviously, there's this imbalance right here. If you just look at this, I was like, this should form a second area of taking profit because this is an unmitigated zone before price obviously closes this daily imbalance, right? So on that, I was like, if you're going to go long, your first target should be the recent high and your second target should be the imbalance. It's always important to identify key targets before you even start trading. And of course, what happened was price traded right into that imbalance. So you could have aimed to obviously take your secondary profit there for 1 to 4. Price traded right into that imbalance, filled the imbalance in that 15 minutes time frame, right? And then it just spent the rest of the day trading below it. So you can see the importance of really identifying, even if that liquidity target was from 5 years ago or 2 years ago, as long as it's an unmitigated area, it is still an area of interest. So do not be scared, do not be lazy in going back in time, especially if you don't see anything in the recent price action that price could be aiming for. Do not be lazy to go back in time and look for that target, because let's imagine that you were lazy and you were like, no, I'm not going to aim for this target, I'm just going to aim for the daily high of the imbalance, right? Then what would have happened is maybe price could have just pinged this and then reversed back down to the low of the range, and you would have missed an opportunity to take profit. So for me personally, again, like I said, Friday wasn't really a day that I would have taken, but this is a variation, is a very messy variation of a BRC where price left an unmitigated area in the 5 minutes, the 1 minute, and the 15 minutes, whilst obviously seeking sell side targets before giving us that bullish reversal. Again, this move was in line with our 4-hour bias, all right? The 4-hour bias was bullish to expansion. So obviously Friday, we saw that third expansion to the upside. So on that note, given the price action we've seen last week, we can now anticipate a lot better for the coming weeks ahead. So study this video, study last week's price action, and use it to make some projections for next week. And I look forward to seeing you all in our market overview tomorrow morning. Happy Sunday, guys, and have a fantastic day ahead. All the best.